Water is priceless. But in today's world, it already has a price. Farmers hedge it. Utilities finance it. And nations trade it without moving a single drop. That's the paradox. The world's most vital resource is quietly becoming a traded, financialized, and strategic commodity shaping economies, borders, and even peace itself. Today, we follow the money flowing through the world's pipelines because water is no longer just a lifeline, it's also leverage. 1. The hidden market of water. Most water doesn't cross borders in tankers or bottles. It travels inside other things: wheat, rice, almonds, beef, cotton. Economists call this virtual water. It's the invisible water embedded in everything we grow and ship. When a dry country buys grain from a wet one, it's importing water by proxy. But there's also a literal market. In 2020, the Chicago Mercantile Exchange launched water futures tied to the Nasdaq Veles California Water Index. It lets users hedge price risk, not claim your tap, but measure scarcity in a vital region. Meanwhile, bottled water, desalination contracts, long-term utility concessions, and water rights add layers of private pricing to a public good. 2. From resource to commodity. Why is water going financial? 3 drivers. Scarcity. Populations rise, aquifers fall, and droughts deepen. Fragility. Climate shocks now hit in clusters. Too much rain, then none. Capital. Infrastructure needs long-term money, and investors love steady returns. Agriculture alone consumes about 70% of global fresh water. In many regions, that share is even higher. And yet, 2 billion people still lack access to safe drinking water. When a resource is this scarce, finance steps in to manage the pain. Futures for hedging. Bonds for pipes. Private equity for desalination. ETFs for investors betting on water tech. Light note: when Wall Street meets a watershed, the ticker usually flows faster than the river. 3. The global water map. Let's zoom out. The world's water map tells a story of imbalance. Middle East and North Africa, water poor, energy rich. This region now runs on desalination, owning over half of global capacity. Costs have fallen sharply, but energy demand remains the choke point. China and India. Massive populations, deep groundwater stress. Over-extraction in northern plains. Policies must balance farm jobs, urban thirst, and river health. Both nations quietly import water through grain, their pressure valve. Europe, battling record droughts. The answer? Regulation, leakage control, reuse targets, and flow protection. But even Europe now debates how to price scarcity fairly. North America, a split screen. The Colorado River sustains 40 million people across 7 U.S. states and parts of Mexico. Agriculture alone takes 70% of its flow. Cuts and reallocation deals stretch through 2026, IBWC 2025. 4. Winners and losers. Who owns the rain? Some nations are born rich in water. Others survive by importing it, silently, through trade. The real winners share 3 things. 1. Storage. Dams, aquifers, and smart recharge. 2. Flexibility. Pricing, trading, seasonal transfers. 3. Productivity. More crop per drop. The losers? Leaky pipes, wasteful subsidies, and weak data that turns every drought into a blind fight. Here's where virtual water flips the map. A dry nation can buy soy or wheat instead of draining its rivers, importing water in disguise. Light note: it's always easier to buy bread than buy a river. After all, every ton of food traded across borders is really water being moved in disguise. Food is water, and water is food. 5. Water and power, rivers as diplomats. Every major river carries both water and politics. The Nile. Ethiopia's Renaissance Dam fuels growth and pride. Egypt fears less flow. Talks swing between cooperation and confrontation, not war, but mistrust. The Indus. The 1960 Indus Waters Treaty survived wars, but new tensions between India and Pakistan show how fragile old deals can be. The Colorado. In the U.S.-Mexico basin, scarcity is rewriting law. Policy, hydrology, and economics are merging into one living system. The lesson? Water treaties must be flexible, with drought playbooks and shared data. Because when rivers negotiate, nations should listen. 6. The business layer. Who profits from scarcity? Scarcity attracts capital and creativity. Utilities and concessions. Global giants like Veolia and Suez manage treatment plants, desalination, and industrial water for semiconductors and pharma. Veolia reported 44.7 billion revenue in 2024, expanding worldwide. Project finance. Desalination plants are funded like mini power stations, steady returns, long contracts. Markets and ETFs. Funds like the Invesco Water Resources ETF, PHO. Let investors buy into water technology, pipes, pumps, meters, filters, and membranes. Water rights. In some places, water trades like property. Private funds buy farmland not for crops, but for the water beneath. It's a drought hedge with moral fine print. Light note. In the water business, the hottest product might just be a leak detector. In this business, capital spending creates reliability, and reliability drives steady cash flow. 7. The future of water. 4 frontiers define what's next. 1. Digital plus AI. Smart meters, satellite soil maps, leak detection. Efficiency is the cheapest new water source. 2. Desalination 2.0. Reverse osmosis keeps getting cheaper. The Middle East still dominates, but California, Spain, and Australia are testing new pilots. 3. Reuse. Purple Pipe programs recycle wastewater for farms, factories, and even tap systems. 4. Managed recharge. Bank water underground in wet years to survive the dry ones. So will water become the next oil or the next crisis? That depends on whether we scale the boring stuff. Pricing that reflects scarcity, sensors that find leaks, and treaties that bend before they break. Water is both lifeline and leverage. We drink it, grow with it, and now trade around it. The market isn't a villain or a hero. It's a tool we use when budgets tighten and rivers run low. The real choice is governance. Do we reward efficiency, protect access, and plan for drought, or wait until scarcity prices us out of our own survival? Stay curious, stay sharp.